Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So today we have Kamyar Razaie with us, and Kamyar is a South California guy. I'm a North California guy, so we're going to have sort of a mutual podcast here between the two of us. So we'll see what differences come up between the kind of San Francisco, San Diego areas in terms of Kamyar is a lending person, and I'm more in the property management, leasing side, but we're going to have some interesting conversation here, I believe. So, Kamyar, great to have you. I'd just love to hear kind of your origin story of how you got into the whole lending side.
Bruce, thank you for having me and having a mutual podcast. How I got started when I was graduating UCLA, I was a private tutor for math, chemistry, and physics. I started working with a broker, and since I was a big numbers guy coming out of UCLA, I thought, going to the mortgage space would be, well fit, and I could help a lot of people get loans easier. And what really triggered it for me is my father was refinancing a investment property at the time. So I was there when the loan agent came out for the loan doc signing. And the way his customer service was, I didn't like it. I felt I could do a much better job, explain the situation much better, and just make it easier for the clients to refinance, purchase a property, either being, residential or commercial. So that really triggered a nerve for me. So I went and worked for a broker for about 6 to 9 months, and I started my own firm.
Wow. So this firm's been in business for how long now?
Since 2005, so exactly 20 years.
Oh my gosh. Wow. So you have gone through the whole ups and downs of the loan and real estate world.
Yes, then the apocalypse of 2008, the COVID era. And so I've seen probably two trends so far. I would say that 2008 was once, I think, not seen for 50 years, but, we got to face it, good or bad, it's an experience. And it's been very unique. A lot of people have come in and out of the industry. Some have stayed, majority have gone, but new ones always come in. And it's the longer you stay in, the more seasoned you are, and the more trust you get in the industry.
Exactly. So let's go back to the 2007, 2008 era. What happened in that time period? You were young in the industry, and all of a sudden everything sort of fell apart. What happened with your particular situation?
So everything fell apart at that time when we started my company. I had a partner. We were 50-50. So it started 2005 during the 2007, end of 2007, 2008, when the whole, economic disaster started. My partner's like, I'm out. I don't want to stay in the industry. And I said, no problem. I'll buy you out. He left, and I was like, just looking around. What did we do? The wholesale mortgage was pretty much out. I mean, nobody wanted to give money. The main people who were in the industry at the time were the big players like the Bank of America, the Wells Fargo, Chase people. And there was one bank at the time, which was HSBC, which was still doing stated products.
That's a Hong Kong bank, right?
Correct. Yes. They were doing still pure stated products, whatever you stated on the application, with verified assets.
Wow.
So we're, helping clients just if they want to get a mortgage and they were able to qualify their stated and or full doc, just place them. But that's the time when banks had a lot of issues with their balance sheets, and they were starting to offer a lot of loan modifications.
Oh wow. Okay.
So I started helping people do a lot of loan modifications, and I probably did about 2,000 to 3,000 loan modifications, help people save their homes.
Oh wow.
Meanwhile, doing this, I was helping a little bit of the higher echelon people in the Brentwood, Beverly Hills area save their homes. $4, $5, $6 million loan balances. Obviously, they did not make their payments either 6 months, a year and a half. And the banks, even though these were not the Fannie Mae, Freddie Mac loans at that time, it was more balance sheet loans. But they were still offering like amazing 2-3% rates, fixed for 40 years.
Whoa.
And I was able to get those for these clients. So, and a lot of them were commercial property owners as well. So they said, if you go into the commercial real estate space, lending, we will become your clients. And that's, in 2011, 12 is that where I kind of made the switch to do more commercial loans.
Oh, okay.
So
So
with the help of these clients, they became my first clients, and over time, through their referrals and good customer service, I was able to obtain more clients.
so did you completely convert from residential to commercial at that time?
80% converted. I still 20% of my business is still residential loans. Obviously, I don't want to give up that business. So
Ah,
even till today, I will take on residential clients that are referred to me, and or for my commercial clients.
so okay, let's fast forward now to the famous COVID era. Now, what happened during that period?
We had a freeze, let's say for 3 months, 4 months. Like, well, obviously banks didn't want to loan. We didn't know where we were headed.
Yeah,
But with the prime rate being reduced so far, and with just we had to really stop, right? And then when the rates came down and the prime was so low, people are like, wait up, this is a good time to buy.
yeah.
At 3% rates, on a commercial property, it changes the whole dynamics and your output. Especially if you were doing, I did SBA loans for clients on a 504, 10% down, with like 2.25, 2.5 rates fixed for 25 years.
Wow. Wow.
So those clients why would they ever want to sell their building unless they really have to?
Right, right. So they're hanging on now,
They're
right?
maybe not. Even the commercial loans who got HUD financing for like multifamily homes for senior living, those were like 2.5, 2.7 rates, 35-year fixed, amortized over 35 years. Why would they sell?
But aren't there a bunch of loans out there right now that are coming due that were in that very low rate and now they're kind of up and coming and the rates are not nearly as good right now?
Yeah, those are the people who got the 5-year fixes. Those are the 3, 5, or 7s, which the 7s will come due in 2 years, right? Whoever got the variable rates are going to hurt right now to go refinance.
Yeah.
Sometimes those people, if it's non-recourse, obviously they're giving back the property, no personal guarantee. But if it's a recourse, they're going to have to come to some strategy with the bank, either return it or refinance or put money out of the pocket to be able to refinance it.
So are you seeing a bunch of loan defaults out there right now? What's happening?
I've seen loan defaults. I speak to the banks. A lot of the ones that are non-recourse, they're giving back their properties much easier. The ones who are recourse, they're trying to deal with the banks, trying to come up with a minimum out of pocket to be able to save their properties. Even during that time, they put down 25, 30, 35% to obtain the property.
Yeah.
So obviously don't want to lose that. They don't want to lose their credit. The personal guarantee can come back to their personal homes, personal, assets. So they have to really work with the banks.
Well, and the banks don't want the property. So, there's some pretty good deals out there right now, right? That are going back for pretty much the loan value.
Correct. There can be. Sometimes the bank works it, sometimes the bank takes the property and gives it to one of their other clients in the banks who have a lot of, assets with that bank. There can be a lot of different, potentials depending on what bank you're dealing with.
Oh, interesting. So the banks are being creative, let's say.
Correct.
Yeah, because they don't want the properties and they don't want to hold them or sell them. So
Correct. They don't want it on the balance sheet. They don't want to be property owners.
yeah. So it's a little bit of a wild time right now, right?
It can be, and depending on what happens with the prime and what happens with the rates, we can get more of these. Or if the rates come down and it makes sense, they're less out of pocket or they are zero out of pocket, people will refinance. But right now with 6.5, 7s for a lot of these properties, when they were in the 2s and 3s, now they come to refinance. It doesn't make sense. The rents are kind of stabilized and some areas have come down.
So what's your kind of crystal ball saying for the next few months? There's predictions it's going to come down. What do you think?
Our prediction in area to area is going to be different, but there will be more downturn in majority of the areas.
Well, there is some downturn now, right?
There is currently, yes.
Yeah, but it's taken a little while to hit the actual consumer.
Correct.
Yeah, but is that helping?
Well, I think the reason for that is, all the COVID savings and everything have
Yeah.
just started to run out. So now it's reality, and all the inflation has hit, so lifestyles are more expensive,
Yeah,
as much savings. So people are living more month to month.
yeah. So I was talking to my stockbroker this morning, and he was predicting that there's going to be a little recession happening soon. Is that anything you see in the future?
I think the recession is dependent upon what's going to happen with the rates. The mortgage rates, which are dependent upon the 10-year bond, and the prime rates, which is dependent for the HELOCs and the credit card debt and auto loans. It all depends how much can the consumer save when the rates come down to be able to afford their mortgages and other items.
Is credit card going up right now? Credit card debt, do you know?
It's at an all-time high.
Oh, really? Oh, I was not aware of that. Yeah. So that's sort of an indicator that maybe a recession is on the way or rates are
Yeah,
going to come down, all that.
it all depends on those rates, and also, from I read an article about a while ago that auto loan deficiencies are at all-time high as well.
Wow. Oh, auto loans are all-time high right now.
Yes,
Well, that's interesting. I did not realize that. So the indicators out there in my brain would indicate that things are getting a little tough.
I would agree with that statement.
So is the number of loans coming in becoming less and less right now?
The numbers coming in are the ones that have balloon payments where they have to refinance,
Ah,
or they have the opportunity. They have to refinance because the fixed period is over. Maybe they can get some cash out. But the majority of loans right now being done, I think, in the market nationwide would be HELOCs and second position HELOCs.
so what's your sort of perfect client right now?
Perfect client even today would be a doctor office owner, I'm sorry, a business owner who's looking to buy their own building and can use the SBA to buy with 10% down.
Oh, wow. Okay. So are you familiar with the US Banks program to fund doctors and dentists?
Yes, those programs are sometimes up to 100%, up to 4 million, $5 million.
Yeah, pretty amazing actually.
The qualification is a little bit harder, right? You have to be able to qualify with the last 2 or 3 years tax returns. But
Oh,
those
yeah.
are available out there for the doctors and dentists.
But the rate's pretty good, right?
They're competing with Bank of America on those.
Oh, okay. Oh, that's interesting. B of A is doing that program also.
Better rates, the majority of the times.
Oh, that's interesting. So are the banks getting more competitive? Is that what I'm hearing?
Yes, they are. Because there's not as many loans out there, they are getting much more competitive to get the applications and fund them on their balance sheets.
Wow. Okay. Well, this is a very interesting time period right now. I think we should talk again probably in 3 to 6 months and see how the rates have changed or how the world has changed and see where we go from here. What do you
Absolutely.
think?
Absolutely. How's the market up there for you? How is Northern California?
Northern California, it's interesting. Let's talk about each different tranche. So, office space is still pretty dicey up here. So, there's still some high vacancies going on, although they're starting to fill up. A lot of the buildings that went back to the banks and were resold and so forth are now at a lower rate, so they can offer lower rates for office space, but there's still not a huge amount of demand, but it's starting to come back. People are starting to go back into the offices. So that's all good. The retail market generally is very hot right now, particularly for smaller retail. The bigger boxes and so forth are a little bit slower, I would think, but even that has some activity going on. And then industrial is kind of in this no man's land right now. So they're all kind of waiting to see how these tariffs are going to shake out. So particularly in the LA market, they're kind of waiting to see what happens with all of that. But there's still pretty good demand for industrial. So we'll see how that shakes out. And then of course multifamily, as with many situations, a lot of those loans that were very low rates 3 or 4 years ago are coming due. So some of those multifamily buildings that had those short-term loans are in trouble right now. But as with any situation in this world, cash is king. So if you got money and you want to spend some money and you've got cash, you can buy some very good deals out there.
I agree with that.
Yeah. So, any other thoughts about the market these days?
I think, I still see, there is a lot of money in the 1031 exchange funds. So those people are the majority of the buyers right now. And they're buying the bigger centers, even a little bit higher cap rates. They just have to place those funds. Instead of paying these capital gains taxes, which can be in the millions or tens of millions.
So, are you an expediter for 1031 exchanges?
I am not. No, but I get clients from different 1031 exchanges that these clients have, let's say 10 days, 50 days to identify property. Otherwise, they lose the opportunity.
Right, which is always a big crunch. Well, unless you plan ahead properly, you can get caught.
Right.
So yeah, you don't want to pay your capital gains unless you can avoid it.
Correct.
Yeah, so that's a wild west world sometimes. But people that know how to work that 1031 exchange can do it very well.
And they do generations.
Yes, exactly. So hopefully it passes along so that you don't have to pay the capital gains.
Correct.
So what's your advice out there for people looking for a loan?
If you're looking for a loan, look at your options. Don't go just to your own bank. There's other banks that can have better loan products, maybe better rates. And, depending on the type of investment, if it's an owner user or an investment property, there's a lot of other options. People are always, free to call me so I can give my advice and what's available out there.
So just a quick question before we end here. Are banks still requiring that you move your funds over to them if they give you a loan?
Majority of banks are. I would say 60% of banks are, 40% are not. And it depends on the loan size as well. You make a big
Uh,
difference.
Okay. So long-term strategy, the banks want your accounts, but they'll take the loan if they have to.
Right. They typically like the operating accounts.
Yeah. Yeah. Well, all right. Kamyar, where can people get a hold of you if they need a loan?
They can always call me at the office, 818-703-9337, or at my email, which is right on next to my name at KREZAIE at Wembley'sInc.com. I'm always here to help, if they have any questions or just trying to look for a building or anything, a loan for the next 1 year, 2 years, you can strategize from now.
Fantastic. All right. Well, let's reconvene in 3 to 6 months and see where the world has taken us.
Sounds good, Bruce. Thank you.
All right.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.